What's up, everyone? It's Cody with MoneyVest. So Meta earnings came out, beat on EPS, beat on revenue, very strong growth year over year, and also cutting expenses for the fiscal year 2023. So the stock's up a little bit over 4%, saving the market just a little bit. Tomorrow we've got Amazon, but in this video we've got lots to unpack. As always, if you enjoyed this video, make sure that you drop a like. Don't forget to subscribe to the channel. We have been gaining a lot of subscribers, so I really am truly appreciative of each and every one of you guys. So super grateful for everyone, and make sure that you keep smashing that subscribe button. We gained over 700 in the last 1 week, or I think it's the last couple of weeks, so a little bit over 50 to 100 per day. So make sure that you keep subscribing, and of course share these videos and like the video as well. I would really appreciate it. And also do connect with me on Instagram if you want to participate in a lot of market polls, and I also do share a lot of my P&Ls, so profit and loss statements over there. The username is going to be just CastWRP, so that's literally, you can search me on Instagram, or the link's going to be down below if you also want to connect me there, and I would love to have you on board. And also, there's 4 more spots left for the Patreon and for Discord. If you want to join for October, there is a 16% annual discount, of course, and you do get access to all the private Discord channels, the trade ideas and setups, and our members-only private videos, all the benefits, including the early access to our MoneyVest Pro platform as well. So all the links down below. We'll love to have you on board. Subscribe, like, follow us on Instagram, and of course join our Patreon, Discord as well. So overall, markets here tumbling. Obviously, Nasdaq officially hitting a bear market in 2023 once again, and we obviously did have a very strong rally so far on the back of Magnificent 7 stocks, but now they're starting to show signs of weakness, with Alphabet having its worst day since the start of the pandemic in March 2020. Can you believe that? We're going back over 3 years to have the worst day for Google. And Jefferies analyst also saying that Microsoft can take cloud market share away from Amazon. And since Microsoft's growth was very strong for Azure, there's now concerns that Google Cloud and even Amazon selling off on the day on the back of Microsoft's very strong Azure growth, that Amazon Web Services and Google Cloud obviously is slowing down on that growth, which I don't think is going to be the case. I mean, AWS is kind of like the leader in the cloud market, so I doubt they're going to take some market share away from Amazon Web Services. But of course, tomorrow we'll find out how well or how poorly the earnings end up being. This right here is the heat map. Very quick overview on Meta. It's still up over 4.5%. We'll take a look at the earnings here in just a minute. But Google, Meta, Nvidia, Broadcom, AMD, the entire chip sector. We got Amazon, Tesla also selling off, with Apple down over 1.3%. Microsoft pushing higher, a little bit over 3% on the back of earnings, of course. But bottom line is the entire market was selling off, with almost all sectors here down on the day, with volatility once again pushing back higher. With coffee prices, we got Nasdaq 100, of course, wheat prices all selling off, with Bitcoin just a little bit under 35,000 and Ether just under 1,800 as well. Now here are the Meta earnings. Earnings per share coming in at $4.39 per share versus $3.63 expected. Revenue just over $34 billion versus $33.5 billion expected. So beat on EPS, beat on revenue. Daily active users just a little bit over 2.07 billion. And monthly active users also at 3.05 billion. Don't you worry, I will be doing a more detailed analysis on Meta, so we'll be going over that in more detail in another video. And average revenue per user was just a little bit over $11 per share for the company. And this right here is something that I shared earlier in our Discord and also in the previous update. Basically, the bear army is kind of taking over the New York Stock Exchange, and the bear leader basically saying, all right, spread out, boys, and remember, no prisoners. And that basically means that, look, we have been showing signs of weakness. The market's kind of struggling right now because of higher yields, because of the higher dollar, because of the fact that crude oil continues to put upwards pressure on inflation. So there's a lot of forces at play from a macroeconomic standpoint, and big tech is obviously having a hard time trading in that environment. Because if you take a look at how the day basically panned out, we had Google down over 9.6, almost 10%. Amazon and AMD down over 5.5%, right? That's pretty brutal. Nvidia down over 4.3%. Meta recovering from the losses from today, although still lower from the sell-off from the day. So it's up 3.8 after hours, but it was down 4% during the day. This entire index, which we also track, which is the Magnificent 7, down 2.8% after hours, up over 0.33% on the back of Meta earnings. Tesla down 1.8% on the day. We had Apple, Netflix. So big tech is having a hard time finding any type of solid ground. We're seeing, a lot of these stocks sell off, continue to trade in their downtrend, and as a result, there is a lot of technical weakness, which is translating over to the S&P and the Nasdaq as well. So I think patience is going to be very, very important because we need to allow for the markets to give us those opportunities, right? Instead of forcing trades, I think it's really important to patiently wait for the prices to come to us and for the volatility to spike, percentage of stocks trading below their moving averages. Once they start to hit our parameters and our criterias, I think it's going to make a lot more sense. The risk reward is going to be far favorable than what it is right now. And I think it's just a little bit of a waiting game because we are coming down, right? We are coming down to very, very attractive levels. For example, S&P 500 stocks trading above 50-day moving average, 16.3. That means 84% of stocks are already trading below their 50-day moving average in the S&P 500. This right here, all percentage of stocks trading above 50-day moving average, 19. So that means 80% of stocks, once again, trading below their 50-day moving average. This right here is going to be the 20-day. We're at 26%. This right here is going to be 200-day. We're at 28%. And this right here is going to be 27.9, which is going to be the percentage of stocks trading above their 200-day moving average. So meaning 73% of stocks right now trading below their 200-day simple moving average. So the lower this number gets, the better it is going to be from a risk-reward standpoint. And again, we will evaluate that when we cross that bridge. Now, crude oil prices are also moving higher, up over 1.9%, so getting validated from that support very, very nicely at roughly around low 80s. And we've got Bitcoin, again, rallying very nicely, just a little bit under 35,000. We didn't quite have a lot of, crypto mining stocks push higher. I mean, they were down. They were all across the board. They were down. How did that happen, right? I mean, Coinbase down 5%, Riot down 1.03. You got CleanSpark down over 1.7. Mara was down almost 3%, even though Bitcoin is still up. Bitcoin is still rallying up a little bit over 2%, almost back up to 35,000. And Ether also up over 24 basis points, a little bit under 1,800. So that correlation may be starting to break off a little bit, but we'll continue to monitor how these stocks end up doing relative to where Bitcoin prices are. Now, going over to the markets, S&P 500 and the Nasdaq, unfortunately, with a pretty sizable breakdown. I hate to break it to you guys, but this right here is the support at 41.75, holds up. And it does look like tomorrow it might, considering that Meta is pushing higher and it has the possibility to kind of create a technical rebound for the market, right? If the sentiment's there, and if Meta's earnings can create a little bit of that optimism during the day, it's possible that we do get a green day, we do bounce back higher from these levels, but today was brutal. I mean, thank God the day's over and 4 p.m. is here so that we are closed just under 4,200. This right here is going to be that support at 41.75. But like I said, there is maybe a possibility that, on the back of Meta earnings, we do see some momentum back higher from a technical perspective, but hate to break it to you that we are still very much in the context of this downtrend. So lower highs and lower lows, and we're not out of the woods yet. And S&P 500 is down from its recent highs. We are down a little bit, I think over 7% now. So this right here is going to be that sell-off, 9% actually. So we are almost in a correction territory, folks, from our recent highs. And from our all-time highs, the S&P 500 is now down over 13%, which again is not an insane amount. I think anything over 20% is when we start to get really, really excited from a dollar cost averaging perspective. Nasdaq from its recent highs is down over 11%, so full-blown correction happening at the moment. And from its all-time highs, as I mentioned earlier, we are officially in a bear market territory because we did close down 2.4%. That's a brutal sell-off on the Nasdaq, and we're down over 20% from our all-time highs. That is officially the bear market parameter for the market. So that's where we are. And like I said, I mean, Meta is still pushing higher after hours. Ooh, giving up on some of those gains, back down to $306 right now, still up 2% at the moment. But, there is, again, depending on what's the market's appetite, depending on the sentiment, it's possible that we do see maybe a little bit of that momentum, maybe slight gap up higher. But of course, intraday, I think it's going to be a little bit more difficult for the market to rally, all because of this. All because of this. This is why, right? The 10-year yield up another 2.7%, getting up to almost 4.96% here. And it's pretty much hitting its high of day, right? So we are pretty much getting up to the high of day at the moment. And if we do breach over 5%, I don't know what to tell you. I think it's going to be difficult. I think it's going to be very, very challenging for equities to keep rallying. I mean, it's just, eventually the market reality were to set in, and the idea that, yields as high as they are, there's going to be some level of risk related to equities and the valuations and the present value of all future cash flows. I mean, a lot of those things play a big role as yields continue to move higher. So for that reason, I think, as I mentioned before, if yields continue to move higher, it's going to be challenging. It's going to be difficult for the markets to rally. And, honestly, if I do have, let's say, uninvested cash right now, I'd much rather be happy with 4 or 5%, which is in money market accounts or cash savings account, than have it be invested in equities at the moment, given that the present values are going to be lower and the valuations are going to be under a lot of pressure considering the higher yields. So it's a new environment, right? So this is something I'm trying to get across, is that this is a new reality for the market. This is a new environment. Hasn't happened in over 16 years, right? And I obviously haven't been on YouTube in over 16 years, right? 16 years ago, like I was still 11. So it's a new environment, right? It's a new reality for the market. And I think stocks now are just kind of resetting to this new higher interest rate environment. And that's really where we are. And I think we have to reset our expectations for what the markets could do in the future. Because if you think about it, S&P hasn't really gone anywhere in the last 2 years, right? So we are pretty much at the same level as where we were back in April of 21. So it's been a little bit over 2 years, right? April 24 will be 3 years of no gains for S&P. 3 years. Can you believe that? 3 years and we have gone nowhere for the market. We are literally at the same level from right now, from a little over 2 years ago. So that's what higher interest rates do, right? And I remember, like, when we talk about a couple of years ago, there was a couple of videos that were released that went over a certain analysis which suggested that market returns over the next 5 years and 10 years are going to be zero, or the market's going to be potentially dead for the next 3 to 5 years to 10 years. And at the time, right, when we're looking at those numbers and we're looking at those reports, we kind of dismiss it, right? We're like, whatever, like, this is not going to happen. I mean, markets are strong. But hindsight 2020, 2 years later, you kind of realize that, the markets haven't really gone anywhere in the last 2 years or 3 years, right? And those reports, some of them, obviously not all of them, but some of them did have a very strong thesis as to why. Oh, there we go, Meta crossing under 300 now. So Meta is definitely back selling off. So this market's brutal, folks. This market is brutal. $306 right now. So it's still above $300. I don't know why that alert went off. But anyway, so as I was saying, there is some thesis, some strong backing to that report suggesting that, okay, in a higher yield environment, it is going to be difficult for markets to find a way to move higher. Anyway, so going back over to the Nasdaq, we've already covered that. So let's talk about Apple now. And Apple here also dropping. And this right here is the entire analysis, as we have already discussed. Lower highs and lower lows, down over 1.3%. Resistance is going to stay put at roughly around $180, with the support level obviously sitting roughly, I would say, in the 170s, but of course all the way down to as low as 157, 156. So those right there are going to be some levels to watch. And of course we got Amazon breaking down, right, with a huge breakdown here below $120, $121 per share. And the next support is going to be at this lower low, which is going to be sitting roughly around $118 per share. And Amazon, as strong of a company as it is, obviously showing signs of a significant weakness and selling off on the day. Earnings are tomorrow, like I said. And the next support all the way down to $118 per share. But this is a big breakdown. This is a big breakdown for Amazon on some heavy volume as well, with 72 million shares traded on the day. Talking about Tesla, and Tesla here also down 1.8%, still coming down to $212 per share here. So pulling right back down, but this right here is the area of demand. That's the area of support that Tesla right now seems to be validating. If you do end up breaking down below this, well, then unfortunately the next support is going to be in the 150s for Tesla. So this is a very, very important level of support to watch for this company at the moment. Talking about PayPal, I don't even know where to begin. Down over 5%, $51. And this right here is pretty much going to be the next support right over here at close to $51 per share. That's pretty much the level that we talked about, in our previous videos. That's a 7-year low for PayPal. That's exactly where we were back in 2017. So it's a 6-year low. We validated that $51 support before pushing right back up. The good thing about this is most of the gaps are filled, except for one gap sitting in the $45 range. It's in the mid 40s. Hopefully that doesn't get filled. But right now, support level $51. That's really what we're watching. Very, very oversold RSI and MACD. And the earnings is the only thing that can save PayPal right now and kind of reaffirm some of that outlook under the new CEO. Talking about Visa, and Visa here on the day also pushing higher, up over 94 basis points, but still within the context of this head and shoulders. So left shoulder, head, and a right shoulder for Visa at the moment. Resistance is going to stay put up to $250 per share. And right now we're just, very much in the context of this uptrend. So we are still making a very nice higher high and higher low for Visa at the moment. If in case we see a breakdown below this head and shoulders, then of course there's a possibility for us to see Visa down in the $210, $211 per share for the company. But right now, very much locked in that head and shoulders. Talking about Nvidia, and Nvidia on the day also selling off, down over 4.3% after hours, down another 1%. Next support is going to be down in the low 400s. So again, we've already talked about that area of consolidation for Nvidia. And honestly, I wouldn't be surprised. There's a lot of signs of weakness for Nvidia at the moment, and with the higher yields and the lower potential valuation, there's possibility that Nvidia also does see a little bit of a breakdown below 400, starts to fill these gaps, massive gaps that it's left since earnings in May. That's going to be sitting roughly in 330s and 340s for this company. Talking about Advanced Micro Devices and AMD here, breaking down, pretty big breakdown here, 5.5% sell-off. And this right here is the sell-off that we are witnessing, and we're going to go ahead and turn this level into a resistance for AMD. And unfortunately, the next support is going to be in line with where we have validated this at close to $94, $95. However, AMD is breaking down below a very critical critical support of the 200 simple moving average. So this right here, massive breakdown below the 200 SMA. The last time we broke down was back right when the sell-off began in 2022 in January. Right, of course, since then we've just been in that lower high and lower low pattern. But right now, obviously, it does look really, really weak. And the only support that's kind of hanging on right now is $94, $95. If you do end up selling off, I think it's possible that we do end up in the low 80s for Advanced Micro Devices. Now, coming to the star of the show, let's take a look. 2.3%, still holding up on some of those gains. So Meta here, still pushing up. $306 is where we are, but we are nowhere near close to the sell-off that we witnessed today, which was down over 4%. So this will be the resistance going into tomorrow at $312, $310 per share. Very, very important level of resistance, and support level is going to stay put at $293 for Meta as well. Talking about Netflix, and Netflix here down about 60 basis points, so very, very flat, not really going anywhere. Resistance is going to stay put at 452. Support level as low as 348, and of course, we got a massive gap to also fill over there. Google here, brutal day, right? Selling off quite aggressively, getting rejected at that resistance. I think it's a little bit of an overreaction. I don't know. Let me know what you guys think in the comment section down below, but I think 9.6% for less than 5% miss on Google Cloud it just doesn't make sense. It's just way too much. It's just way too aggressive. The market's punishing Google for a really, really small miss. And after hours, it's down another 70 basis points. So, would I love to see Google at 117? Yeah, absolutely. Just bring it down, and I'll be looking at selling some puts or buying some shares at those prices at 117. And, if we got that 200 SMA sitting right there. But man, this is just absolutely brutal market. Punishing stocks left and right for very, very small misses. The earnings were fantastic, right? I would say AA plus, right? Better than the credit rating of the treasuries, I would say. But here we go, down 9.6%. Nothing you can do. Next up on the list is going to be Microsoft, and Microsoft obviously rallying on the day, but intraday selling off. So red candle, but a green day. And a little bit of that gap got filled, so we've got a small gap now. But still, that's going to be that support and resistance roughly in the 340 range. Resistance all the way up to 366. And all the way down to 310, another really important level of demand for Microsoft. And finally, we got Costco and Enphase, and Costco is basically flat, down about 34 basis points. So going over the daily chart, this right here obviously is the entire analysis, sitting right above that 100 simple moving average, getting a little bit of that resistance at 575. So inside that red rectangle, support level is going to stay put down to 531 for Costco. And Enphase also getting murdered, down over 0.5%, hitting a new 52-week low, down to $90. But buyers indeed stepping in, so definitely very oversold, and they've got earnings coming up tomorrow. So Amazon and Enphase is going to be tomorrow. Very, very important numbers, and we'll find out how good the business is doing right now. So resistance all the way up to $100, $108, and support level is going to stay put at $92 for Enphase. So hope you guys enjoyed this video, found it helpful. If you did, make sure that you drop a like. Don't forget to subscribe to the channel. Link to our Discord, Patreon is going to be down below. Again, if you're interested in joining, we'd love to have you on board. 16% annual discount, 4 more spots left for the month of October. Connect with me on Instagram at CastWRP. And as always, happy investing. I'll see you all in the next video.